thank you very much, the organizers and the other participants. I'm very happy to share my research work here in this portal. And I'm looking forward to having a lot of inputs from you and being associated with all of you in future as well. So I work with Shiv University, and we are working on the topic ESG mutual funds in India, aligning profit with purpose. So this topic has attracted us because nowadays the current generation also has become very much aware of these social responsibility concept, and everyone wants to invest in their funds, which are very like they are very much concerned with the environmental, social, and ethical factors. So this research is triggered by the thought that the company should be ethical, along with the purpose of making profit. So is my second slide visible? Is it moving forward? This is regarding the presentation flow. Is it visible to everyone here?
Yes, yes.
Okay. So, I'll be taking you through the conceptual framework of my research, of our research, and then we will move through the data analysis and the comparison of the ESG mutual funds with the normal funds. So, along the way, I'll discuss about the data, methodology, and the analysis tools used. So starting with the basic premise of what is exactly is ESG mutual fund. It is environmental, social, and governance mutual funds. They invest in companies like that meet environmental, social, and governance criteria, promoting ethical and sustainable investing. This is a relatively new concept, and a lot of research is being happening in this area to quantify the measures of environmental, social, and governance factors. They help align investments with socially responsible values while potentially in reducing long-term risks. We have seen many instances where the companies are profitable, but they are detrimental to the environment. And such companies are not favored by the investors. So this is basically a quantitative study in which we have taken the secondary data. But in future, we also look forward to take the primary data and have a survey kind of thing to augment our research. While ESG factors are often considered from a company's perspective, the potential profitability of ESG investments from an investor's point of view need to be explored. This research aims to examine whether ESG-focused investments yield superior financial returns and how these factors impact investing performance and profitability as perceived by the investors. This research intends to provide valuable insights to the investors and as well as to the company holders, or we can say the entrepreneurs. Environmental aspects include this carbon footprint, pollution, renewable energy, etc. Social factors include how a company manages relationships with its people, employees, treatment, diversity, community engagement, etc., and human rights, which is a very talked about phenomenon these days. Thirdly, the governance factor, how a company is run, that is executive pay, board diversity, shareholder rights, transparency, whistleblowing policy, employee stock options, all these comes under the governance factors, which are evaluated before the person invests in a company. Why do we invest? Align investments, why do we invest in ESG mutual funds? The primary objective, as we have taken out from the interviews and the interactions with the people, they align investments with personal value systems, potential to manage long-term risks, climate change, climate risk, social backlash, increasing evidence that strong ESG practices can lead to competitive financial performance. So we need to we can say, augment the current research in this direction and see how effective they are. The theory, which is the main theory behind this, is the stakeholder theory, which says that companies should create value not only for shareholders, but also for all the stakeholders, including employees, customers, suppliers, communities, governments, accreditors, and environment, etc. There might be many other factors which are to be considered before one person makes an investment. And it is important, not only the profit, but people are also important. Governance is also important. Environment is also important. So this is the basic theory. And also there's one more theory, people, planet, and profit, the triple bottom line approach, which is underlying the corporate social responsibility and environmental, social, and governance policies. Why would people prefer ESG? Because of risk management. ESG funds often help reduce exposure to environmental diseases, disasters, scandals, and regulatory fines. Next generation investors prefer ESG. Younger generations like Gen Z and millennials, as we call them, they are more likely to value impact investing, avoid sync stocks, that is tobacco, weapon, oil, etc., and prioritize ethical brands. They always try to invest in the brands which are ethical and not only making profits. So we have seen this change in the perception of the investors, who are new investors to the community. Literature review has mixed evidence on the ESG performance because it's a comparatively new area of research. So we have seen the literature papers which are talking about ESG funds, but the results are mixed. Some people say that the ESG funds outperform the normal benchmark. Some research studies say they are in line with the normal benchmarks. And some people say it is not effective at all. So there are mixed results, positive, negative, and neutral. So our research is trying to see what is the impact in Indian context for the ESG mutual funds. The objective here is to evaluate the performance of ESG funds with the non-ESG funds. Secondly, to examine if ESG funds result in stronger and more consistent financial returns. That is a period of 3 years we have taken. Thirdly, evaluate the risk-adjusted performance of ESG funds using metrics like trainer ratio, alpha, and beta. And then to determine the ESG fund offer competitive returns while managing market risk effectively compared to non-ESG funds. We have taken the following funds for our study, which are there available. SBI ESG, Quantum ESG, Axis ESG, ICICI, Prudential, Quant ESG Equity Fund, Mirae Asset Nifty, Kotak ESG, Aditya Birla, Invesco India, and White Oak Capital, which is the recent one. So we could take only 1 year data for that. The tools which we have adopted for the analysis of data and the type of analysis, we have taken average monthly returns of the funds, range of returns, maximum minus minimum, holding period composition, compounded annual returns, growth rate, annualized standard deviation of the returns, and then capital asset pricing model. We have used Sharpe ratio, Tenor ratio, and Jensen alpha to compare the fund performance. And then we have used other statistical validation methods like R-square and beta to calculate to examine the performance. So these are the some of the results. Average returns. The Quant ESG equity fund has outperformed the benchmark. ICICI has outperformed and Mirae Asset has outperformed. And that means they have higher returns than the normal benchmark returns. Volatility in estimation, we can see that there was a high volatility for Quant ESG and Axis ESG, and low volatility as compared to benchmark in the case of ICICI fund only. In the portfolio concentration, high concentration was observed for Quant ESG fund, and diversified portfolio was observed for White Oak Capital ESG. Beta and R squared, high beta for Quant ESG indicating higher market sensitivity. Low beta indicates lower risk market risk. High R squared Mirae Asset suggesting passive management, and low R squared Invesco India ESG fund was observing, suggesting active management of the mutual funds. So again, these results are based on the data which we have gathered for 3 years. We plan to augment our research with the primary survey, where we have to survey the investors regarding their perception about the ESG mutual funds and what all improvements can be made and what are the factors which influence these perception of the investors. So the behavioral biases, and we will take into account the behavioral aspects of investing as well. So this is an ongoing study, which is like a working paper. We want to publish it as. So in future, I again want to present my results, maybe in the next conference. So as of now, we can conclude that ESG funds in India demonstrate the potential to generate competitive returns while supporting sustainability. Secondly, performance varies based on fund management style, sectoral focus, and risk tolerance. Thirdly, actively managed funds like Aditya Birla Sun Life showcase stronger risk-adjusted returns. Moreover, investors should diversify across high growth and low volatility ESG funds to balance risk and returns. Next, policymakers can support ESG adoption through awareness programs, regulations, and incentives. As in India, it is a relatively new area and not many people are aware of it. We need to have some awareness programs and some kind of educational forums where investors can be educated regarding the environmental, social, and governance mutual funds. Lastly, continued research and transparent reporting are essential for the growth of ESG investing in India. ESG funds remain a viable choice for investors seeking both financial returns and ethical investments. ESG funds in India have demonstrated their ability to generate competitive returns while promoting sustainability, and with careful selection, they can offer a balanced approach to achieving both financial and ethical investment goals compared to non-ESG funds. So we intend to augment this with the primary survey, as I told you, and we will see what are the results. And you can compare the perception of the people with the actual investing pattern of people in India. Thank you so much, everyone, for a patient hearing, and I'm looking forward to associate with all of you in future conferences.
Thank you. Thank you, Dr. Madhuri Malhotra. Thank you.